Hello everyone, myself Dr. S. MOHAMED NAZEER. This class I am going to teach you macroeconomics. In macroeconomics, circular flow of income. What is circular flow of income? An economy is an integrated system of production, exchange and consumption. In carrying out these activities, people buy and sell goods and services. Income generated in the production process flow in a circular manner. It is a circular because there is no beginning or an end. Circular flow of income refers to flow of money income or the flow of goods and services across the different sectors of an economy in a circular flow. This is the meaning of circular flow. Now, types of circular flow. There are two types of circular flow. Product flow and income flow. Okay, product flow and income flow. Product flow also known as real flow. Income flow also known as monetary flow. Product flow classified into two categories, that is factor flow and goods and services flow. Let's see one by one. Product flow. It is also called output flow or real flow. It refers to flow of factor services and flow of goods and services. That is, it consists of factor flow and goods flow. Okay, so the product flow consists factor flow and goods flow. Okay, now income flow. Income flow is also called money flow. It is in a monetized economy, the flow of factor services generates money flows in the form of factor payments, which take the form of income flow. The expenditure on goods and services take the form of expenditure flow. There is an income flow, expenditure flow. Okay, income flow refers the money flow in the form of factor payments and consumption expenditure. Okay, this is the types of circular flow. There are two types, product flow and income flow. Now I am going to explain the significance or importance of circular flow. Okay, there are four significance are there. Let's see one by one. Number one, knowledge of interdependence. Circular flow model help to understand interdependence between different sectors of the economy. For example, it tells the interdependence between producers and household sectors. Okay, it will explain the interdependence between the producer and the consumer. Number two, the second significant, size of national income. The magnitude of circular flow determines the size of national income. I repeat, the magnitude of the circular flow determines the size of national income. More the magnitude, more is the national income and vice versa. This is the second significance. The third significance is level of economic activity. Circular flow, through its information on various macro variables, tells us about the level of economic activities, okay, in an economy. So with the help of the circular flow, we can judge the level of economic activity. The fourth significance is injections and leakages. Circular flow gives us information on injections like investment, government spending, exports. Okay, these are called injection in the circular flow. Investment, government spending and exports. Leakages like saving, tax and imports. Okay, savings, tax, imports are called leakages. With the help of the circular flow, we can see the injections and leakages. These are the significance of the circular flow model. Now I am going to explain the circular flow of income in a two-sector economy. Okay, to present the flows of income and expenditure, the economy divided into two sectors. Number one, household sector. Number two, firm sector. It is a model of private and closed economy. It is a model of private and closed economy. Features of household sector. Household sectors are the owners of all factors of productions: land, labor, capital, organization. Okay. The household sector's total income received is wage, okay, rent, profit, and interest. The household sector are the consumers of goods and services. That is to say, they make consumption expenditure to the business sectors. These are the features of household sectors. Now, features of firm sector. The firm sectors hires the factors of productions, land, labor, capital, organization from the household sector. Okay, the firm sector will hire the land, labor, capital, organization from the household sector. The firm sector produce the goods and services and sell these goods and services to the household sectors and receive income from them. Okay, these are the features of firm sector. Let's see this with the help of diagram. This diagram shows the circular flow in a two-sector economy. The upper half shows the factor market and the lower half the commodity or product market. Each market generates two flows, a goods flow and a money flow. Money flow shown in the dashed or broken line. Each sector is a buyer and a seller. Look here, this is the household sector, this is the firm sector. Okay, household sector is giving factors to the firm. Land, labor, capital, organization to the firm. Firm is using this land, labor, capital, organization and producing goods and services. For that, the firm is giving the payments to the factors. So the payments is going there. The labor is getting wage, land is getting rent, capital is getting interest, organization is getting the profit. Now the household is earn the money. Okay, after that, the household is giving this money to the firm, the payment for goods and services. The firm is giving the flow of goods and services. So this is called the product market. This is called the factor market. So these are the product market and the factor services. Okay, the inner line. The inner line shows the money flows. So the money is going here and going here. It is in the circular flow. Okay, this is the circular flow. Thus is our simple economy. The total production of goods and services by firms is equals to total consumption of goods and services by household sector. Okay, the factor payments by firms is equals to factor income of household. The consumption expenditure of household is equals to income of the firm sector. Real flow. Okay, this is the real flow. The factor services, the product services is called real flow. The real flow of production and the consumption of firms and the households is equals to the money flow. This one is money flow. The money flow of income and expenditure of firms and the households. So the real flow is equals to monetary flow. This is the circular flow of income in a two-sector economy. This diagram explains the circular flow of income in a two-sector economy with the financial system. Financial system is essential for the working of the modern economy. Financial institutions are intermediaries between savers and investors. Okay. Features of financial system. All savings by households go to the financial or money market. Number 2. The financial market invests this money by lending out to firms. Firms need money to finance new investment in plant and equipment. Okay, in this case, leakages are savings by households and firms. But when firms borrow this money for investment purposes from financial system, then they become injections into the circular flow. Savings are leakages and investments are injections. Important condition is that leakages must be equal to injections. Saving and investments are essential for capital formation in a country. See, look at this diagram. This is the household sector, the firm sector. So the household sector is giving the factor services, land, labor, capital, organization to the firm. Okay, firm is using these factors and giving wage, rent, interest, profits to household sectors. So household sector is consuming. Okay, for that they are buying the goods and services. The firm is giving goods and services to him. Household sector. So remaining amount they are saving in the financial system. Likewise, the firm is also earning the income through the selling the goods and services. So the household is giving money to the firm. The firm is also saving in the financial system. Okay. After that, this financial system giving this savings to the firm. Okay. This savings to households also. Again, they will buy the goods and services. They will invest in the production. So this saving is leakages becomes injection in the name of investment in the economy. So the income will flow. Income will circular flow between the households and the firms. This is the circular flow with financial or money system. This diagram explains the circular flow of income. Okay, the circular flow of income in a three-sector economy. Okay, the three sector of an economy are households, okay, households, firm, and government. Okay, the government sector receives direct taxes from the household sector and indirect taxes from the firm sector. Government sector makes transfer payments to the household sectors and gives subsidies to the business firm sector like food subsidy, fertilizer subsidy, etc. The government saving goes to the capital market and borrows from the financial system. Look here, this is the household sector, this is the firm sector. So household is giving the factor of productions, land, labor, capital, organization. Okay, with the help of land, labor, capital, organization, the firm is producing goods and services. Okay, and then it is giving the payments to the households, that is the factor payments. What? Rent, wage, interest, and profit. Okay. After the household earn that money, they are buying goods and services, consumption expenditure to the firm, and then the firm is giving the goods and services to the households. Now, government enter into the picture. Okay, the government and the financial system. Okay, now government. What government? Government, the firm is giving direct and indirect taxes to the government. The household is also giving direct taxes to the government. Again, the government is giving wages, salaries, transfer payments to the households. Like that, government will purchase and gives the subsidies to the firm. Okay, this is the three-sector economy. The financial system, what they are doing, the household is saving in the financial system, the firm is also saving in the financial system. Then the household is borrowing, the firm is also borrowing. Okay, government is also what they are saving in the financial system and then borrowing this amount to the financial system. So all the money is flow in the circular flow. This is the circular flow of income in a three-sector economy. This diagram explains the circular flow of income in a four-sector economy. Four-sector economy is an open economy. In an open economy, there are imports and exports with the rest of the world. Today, all economies are open economies. Okay, this shows the four sector circular flow model. Okay, look at here. The foreign sector makes the payments to the firms for its exports to rest of the world. Foreign sectors gets payments for imports made to firm sector. The household sector exports factor services to rest of the world sector. The external sector makes net transfer payments and net factor payments to household sectors. Whereas factor payments, rent, interest, profit, wages are related to the factor services, transfer payments are not. Look here, this is the household sector, this is the firm, this is the government, this is the external sector, this is the financial system. You know that the household is giving land, labor, capital to land, labor, capital organization to the firm. Okay, the firm is using these factors and producing goods and services, and the firm is giving the factor payments to households. Both households and the firm are saving and borrowing, and they are again investing in the business. The government is also what? Government is getting taxes from firms and the households, and the government is giving the transfer payments to households and firms. So this is the external sector. What we can say, the net transfer payments and net factor payments, the imports. Okay, we can simply say the imports income is going outside. Import is going income outside. Export is income is coming inside. Okay, so this is the four sector economy with a financial system. Now I'm going to explain the concept of stock and flow. Stock means The quantity of an economic variable which is measured at a particular point of time. Flow is that quantity of economic variable which is measured during a period of time. So the stock is the economic variable measured in a particular point of time. Okay. The flow, the economic variable which is measured during a period of time. Stock has no time dimension. Okay. The flow has time dimensions like per hour, per day, per month and per year. Stock is a static concept. Flow is a dynamic concept. Examples of stock: wealth, water in a tank, inventories, capitals. These are examples of stock. Flow, income is the flow. Water in a stream, it is also flow. Changes in inventories, capital formations. These are the examples of flow. There is a mutual dependence between stock and flow. For example, flow of withdrawal from a bank depends upon the stock of saving. I repeat, the flow of withdrawals from bank. The flow of withdrawals from bank depends upon the stock of saving. So simply, stock, a variable whose value is measured at a point of time. Flow, a variable whose value is measured during a particular period of time. This is the concept of stock and flow. In this class, I explained to you the circular flow of income in two-sector model with the financial system, three-sector model and four-sector model, and the concept of stock and flow. Thank you.